Paul Cleary, the title of your book's an allusion to Donald Horne's The Lucky Country, and the idea that Australia is blessed with abundant natural resources, but that it's made us complacent in managing it. Now, comparing ourselves to other developed countries around the world, we're actually doing better than okay. We've got low unemployment, a stable banking sector, decent growth, buying power. Why are you so concerned about the mining boom?
Well, I think the history of most mining booms, and particularly in Australia, is we tend to have a really strong period of growth, which can be inflationary. And unlike other resource-rich countries, we don't have the policies in place to really manage these booms for the short term or even for the long term. So what our governments tend to do is, what happens, mining booms can actually make things worse. And the bigger they are, the bigger the problems. Governments in Australia, they actually tend to spend all the money at once. That's inflationary. And then when the boom's over, there's nothing left to really get us through the down years. This happened in the last years of the Howard government. They spent 94% of a $330 billion windfall in revenue. And then when the GFC came along, the Labor government had to go into debt to the tune of over $100 billion. We're going to be paying that off for the next 10 years. So we've really had this sort of feast to famine sort of existence with mining booms. In fact, I put down the fact that we've got low unemployment and a good economy to all the other things that have gone well in our economy. The central bank that's managed monetary policy well, reasonable fiscal policy. So the problem is, I think, without the policies in place to really manage this mining revenue, we're going to end up possibly coming off a lot worse.
And just to step back a little bit, I think there's a lot of misinformation around, a misapprehension about the size and the importance of the mining sector in Australia. In sort of GDP terms, what are the percentages of the mining sector now as compared to before this boom?
Before the boom, it was probably about 5 or 6% of GDP. It's now doubled to around 10%, which is so 1/10 of our economy. It doesn't sound like a great deal, but the thing about economics, it's really the important thing. It's the change rather than the level. So if you have a big change, a big increase, that can really sort of put things out of whack if you don't have the right policies. Now mining, even though it's 10% of the economy, it's now soaking up 70% of all new capital investment. It's now generating 60% of our export revenue. So we're becoming very dependent on this sector, which is actually a very volatile sector. It has a few good years, big increase in prices, and then lots of slow years. And the problem with what's going on with the capital investment side is that all that money is actually sort of being sucked out of the rest of the economy. The reason why the non-mining sector is actually now starting to have trouble, retail and the like, is that when you haven't got capital investment, you don't have growth. So you're really having this quite sort of extreme two-speed economy.
But I guess the changes that we're talking about, in some ways they're just growing pains that happen to economy. There's always creaks around the edges, changes to the structure of economy when you have a particular sector that's being successful. How are these changes in your mind any different from the usual structural adjustments that happen in an economy?
Well, really just the scale of it. I mean, what we've seen now, we've got our terms of trade, that's the ratio of our export prices to import prices at a 140-year high. And we've got this huge investment surge, $170 billion of new capital investment already approved, another $250 billion at an advanced stage. So it's really driving that sector very hard, soaking up all of that investment. So what tends to happen is as you have this surge in growth, it can be inflationary. And part of the reason why we've got such a sort of stampede of investment is because I think our taxes are too low on mining. I mean, we're a first world country that really does have third world levels of taxes on mining. And these are finite, non-renewable resources. So countries like Norway and Chile, well, Norway's much smarter than us. Their nominal tax rate on petroleum is 70%. So they don't get this sort of crazy stampede of investment that we're experiencing that can really sort of unhinge your economy. And if we had a more robust tax system, we'd get more money out of it. We'll be able to save some, which we're not doing, but also you wouldn't have this runaway investment and you wouldn't have all these other adverse effects.
Do you think the sorts of changes that you're advocating, like for higher taxation, would they ameliorate the problems that are striking the manufacturing sector. Do you think that would affect the level of the dollar, for example, also?
Well, it would, because if you had a higher level of tax, so the tax alone wouldn't do it. You need to have these other mechanisms to save the money, to put it into an offshore foreign currency fund. But if you did have a high level of tax, you wouldn't have this incredible surge of investment, this massive expansion to increase capacity, and therefore the dollar probably would be a lot lower than what it is now, at least, probably 80 or 90 cents, not the sort of really high levels. If you had a better tax regime, you wouldn't have this investment stampede. You'd have more sensible investment plans being rolled out by the companies. So therefore, the expansion of output wouldn't be as great, and you wouldn't have such a surge in export earnings, which is actually driving the dollar. But tax alone won't address these problems. The tax needs to be combined with a really sensible, established foreign currency fund, which has proper governance, which is sort of like spending the money from mining in a more sustainable way. We just tend to spend it all at once. The federal government, but also the state governments as well. Their royalties come in one part of the budget and they go out straight away and they're spent. So if we had a better savings mechanism as well as taxing, I think we'd have a more sensible and more moderate sort of mining boom.
Would you class yourself as being in the minority of economists on this view that we should moderate the growth of the mining industry?
Not at all. In fact, my views are very much sort of orthodox economics views that line up with those of the Treasury. I mean, they were putting forward the resource super profits tax. They didn't call it that. That was the PR spin. But they were putting forward this tax regime, which was very sensible. It wasn't as well explained as it could have been. It was probably a bit too complex. It could have been. It should be simplified. But no, my views very much line up with the orthodoxy.
And do you think the idea of the resources rent tax is to moderate the growth of it, to control the growth of the mining
That's
sector?
actually not the idea. The idea isn't to do that, but it would certainly achieve that end. The idea of the resource rent tax is to really just guarantee the citizens of Australia a proper and decent return for the exploitation of their wealth. Because what's happening right now is the multinational companies, 80% of mining is done by the multinationals. They are literally printing money out there in the Pilbara. They've got fantastically profitable operations, and they're profiting by running down our wealth, by running down our stock of natural endowments.
And speaking of which, the level of foreign ownership, it's not greatly understood, I don't think. What's the sort of percentage of the foreign ownership of mining in Australia?
The level of ownership is probably somewhere between 75 to 83% in terms of the estimates I've looked at. Some of the companies try to artificially reduce that level. BHP claims it's only 40% foreign owned, but that actually is looking at the number of shareholders, not the actual ownership. When you look at the ownership by these investment funds, pension funds around the world, BHP is around 80%, so is Rio Tinto, and then Xstrata. They're the big three. So those big three together on average are about 86% foreign owned. And I mean, they're investing their money. They say they're doing the right thing by Australia because they're ploughing their money back, and indeed they are, but why? Because it's so fantastically profitable. But as they get to the bottom of the quarry and they run out of profitable mines, they'll start shipping their capital back overseas, and they're already paying substantial dividends overseas.
Given the prices of commodities at the moment, isn't it better to be selling this while the prices are high?
Well, look, it does make sense to take advantage of those high prices, though. The problem is that what often happens in mining booms is that the companies are actually quite slow to react to the prices. I quote Brian Fisher in my book, the former head of ABARE, who said they were telling the iron ore companies that they need to invest in new capacity, and they ignored them. And so after delaying the investment, all of a sudden there's this stampede, and he makes the point that the companies often underestimate the length of time it takes to bring on new production, and often they miss the boat. By the time they've invested all this money, the boom has passed and the prices have come back down. It's a classic sort of capitalist cycle that they often tend to overinvest and really miss the boat. So I think this is part of the problem of not having a more sensible tax regime, and therefore we wouldn't have this sort of excessive level of investment. But I do think it does make sense surely to do that. But you have to remember that this boom could actually go on for a long time. The Treasury and the Reserve Bank are telling us this is going to be decades long, several decades.
Do you buy
30,
that?
40 years. Look, it could. I wouldn't want to bet my house on it. Wouldn't want to put all my superannuation into resource stocks. I'd want to maintain a balanced portfolio. Australia, I think what we're doing is we're skewing our economy towards resources, and it is a very volatile sector. I mean, you do have these short, sharp booms and then busts.
There's some interesting calculations in your book about the amount of resources that we have left. How long, for example, if we continue to raise the rate of extraction of things like iron ore and LNG, how long do we actually have?
Well, this is one of the great fallacies. In Australia, a lot of people think we have endless amounts of resources. We don't. Iron ore, which has now become our biggest export, the figures there have come down in the last decade from over 100 years to 70 years. But those numbers don't take into account the fact that the companies are gearing up to double, if not treble, their output. Those estimates are produced by Geoscience Australia, our geological survey agency. They're based on publicly available information from the companies. The really big lie actually is to do with gas, because the government figures claim 63 years, and yet unlike iron ore, gas is subject to forward contracts. And so we've already signed contracts to treble our production of gas this decade and to quadruple it over the next 2 decades. So we should be dividing that 63 years for gas by 2 or if even 3. The unconventional gas, which is like the coal seam gas, that's 100 years. But again, that could be more like 30 years if you take into account a trebling in production.
And you were involved in East Timor. I was just hoping to get your views on your explanation of how they've calculated their oil resources in the Timor Gap and how they've put it into a sovereign wealth fund is one that I think you seem to sort of strongly believe in. Could you quickly just describe how they've calculated what the lifetime?
Yeah. Well, it's funny because at the moment the Australian government is bringing Timorese students over here on scholarships to learn about our resources industry and how to manage it. I think we should be sending people to East Timor to learn from them, because what the Timorese do, it's modelled on Norway, and essentially the idea is to turn non-renewable resources into a financial asset that can last forever. So their petroleum fund was set up in 2005, and what they do is they have a sustainable spending limit, which is the 4% real return on the fund, but also it's based on the present value today of the production, the oil fields that are already in production. So it really is about setting up a sustainable rate of expenditure for how you can draw down on the fund and taking into account both the money in the fund but also the oil in the ground, which is part of their resource as well. Now, if they find more oil fields, the amount of money they spend can go up, but at the moment what they've got is a very robust, very transparent way of spending their resource revenue in a sustainable manner, and we just don't do that.
Is that the sort of system that you'd advocate for Australia?
Well, I actually think we need to come up with a sustainable spending limit. I actually think the problem with that model is you have to go around and calculate every mine and oil field around the country. It's okay in Timor, they've only got a few. I looked at the experience in Papua New Guinea, where they've come up with this rule based on advice from Treasury to do what's called to spend the average. So you take the 20-year average for all your mining related revenue, your company tax, your payroll tax, your royalties, and that becomes your average as a share of GDP, and that becomes your spending limit. And the good thing about it is that as the boom goes on, the average rises, and if the boom suddenly ends and the prices fall because you've got money in the fund, you can continue to spend at that average to boost your economy. So that's, again, a very robust, transparent way to do it.
And what's the argument for doing that over, for example, spending it on infrastructure?
Well, you can do both. I mean, you can actually... The money that you can spend in an average sense can be spent on recurrent outlays to run the services of the government, but also they can be investing in infrastructure. But I also talk about a case where if this was managed well, if there were worthwhile projects that were worth funding if there were high-speed rail projects that had a really good rate of return. Perhaps we could argue that it would be better to be investing in those projects rather than in the fund. But let's actually be really transparent about it. So let's have some proper cost-benefit analysis of these projects. At the moment, we don't do any of that. We just really spend all the money as it comes in.
Yeah. And looking around the world, the other resource-rich countries, economies, how are we placed in the scheme of things as to how nations organise the wealth that they receive from their resources?
Well, if you compare us to Norway, to Chile, to East Timor, Papua New Guinea, I mean, we really do compare very poorly. Essentially, we are...
In the sense that we're spending...
In the sense that we spend all the money at once. The state governments as well, they're actually even worse because they get royalties and that's a share of production. So they're essentially spending our capital year in, year out. They spend capital that's derived from the wealth in the ground. If you compare us to these countries, essentially Australia is a resource-rich country that, aside from the mineral resource rent tax, which is a pretty modest effort, doesn't really have the policies in place to manage its resources, unlike Norway and Chile. These countries that have had really good leadership. Interestingly, they've actually had women in prominent places when they've put in these policies in place, but unfortunately we really don't stack up very well. So I don't know why our government's actually trying to make us a model for the developing world.
And what are the pitfalls? Like, what are the examples of countries that blow their resources money?
Probably the worst case scenario, and that we're looking at, it's not very far from Australia, is Nauru. And if you look at Nauru in the 1960s, I mean, if you look at Australia now, it might sound absurd, but there actually are some similarities. That was a country, a tiny little island that had phosphate that basically just boosted its standard of living by running down these resources, bringing multinational companies in to do it. Obesity became a huge problem. The country really did blow the money on. They had their own international airline. They actually put on performances in London and in theatre, and they really did splash their money around. But now they're actually physically and financially a wreck. And I think if Australia doesn't really have better policies, I mean, we could sort of in 50 years or 100 years' time sort of really be looking at a country that's had its resources just completely plundered and has nothing to show for it.
And what are the chances of the mining boom ending well before then? What are the other sorts of factors that cause the end of a boom?
Well, it's interesting. Yeah, Treasury and the Reserve Bank say decades long. I think that's a really heroic forecast. I mean, we all know that booms do end, and when they end, it's pretty nasty. The two factors are that, we look at the instability at the moment in the world economy, and even though China's going very well, a lot of people look at China and they see it as a real bubble. It's driven by ever increasing investment that really can't be sustained. And so if demand suddenly crashes, then those prices will come crashing back to earth, but also supply. I mean, we say in this country, a lot of our economic experts say we've got all these resources. Well, so does everybody else, because the thing about commodities is they're a generic product. And so Mongolia is ramping up its iron ore production. Afghanistan's got a lot of iron ore. LNG's coming on stream in PNG and all around the world. So we really are putting all our eggs into a very volatile, generic basket of goods.
Why in Australia does mining have such a hold over our national consciousness? It seems that this is it's very difficult to talk about doing things a different way with relation to the mining sector. Why is that?
It's interesting. I think this boom has really started to change our culture. I mean, if you look at back at Australia 8 years ago, 2003, we had a much more diverse, more balanced economy. But I think we've just become bedazzled by these riches. And it's what tends to happen in mining booms. You get this euphoria, this sort of economic effervescence. And all of a sudden, people just think we can't get by without digging things up and putting it onto ships, bulk commodities. As a country in the 80s and 90s, we really changed. We slashed our tariffs. We built up new industries that were based on innovation and intellectual property, and unfortunately that's gone. And I think it is an example of just the way we do get what I say is awestruck, spelled O-R-E. We get completely bedazzled by these mineral riches, and it's what happens around the world. I quote the experience of Zambia in the 60s and 70s, this country believed, because of its copper riches, that it would join the ranks of first world nations. And they had a very inflated standard of living for a few years, but then it all crashed and it came, to a screeching halt.
Yeah, but I guess the irony is trying to make a change at a time like this, you're fighting a lobby that's got more money. The mining lobby has more money than it's ever had before in Australia, and they're more than willing to spend it, especially when they're fighting something like a resources rent tax. What do you see as the likely chances of the way that our politics is at the moment, of there being any sort of major change?
I think people in Australia really need to rediscover their democracy and realise they can make a change. For example, up in the Liverpool Plains, I met the farmer Tim Duddy, a sixth generation farmer, and he ran as an independent in the recent state election in New South Wales, got 20% of the vote, gave the sitting member, who's a minister, a real fright. And as a result of that, the New South Wales government, a Conservative government, strongly influenced by the mining industry, has put a halt on fracking and coal seam gas and is now having an inquiry. And I think it's people like that taking action, and Tim Duddy's also stopped BHP from exploring on his land. And that's happening, I think, in Queensland. As these projects start to get rolled out and people see the reality of a single project in having 10,000 production wells and 10,000 kilometres of pipelines and access roads, people and the impact on water as well, I think people are really starting to wake up to this. So I think it's really a case of people power can make a difference, and hopefully it will.
And I guess you're saying that also because you don't see any possibility that either the Labor or Liberal parties will back sort of major changes.
Well, I mean, Labor's done so in a modest way with the mineral resource rent tax, though it is a very weak tax. I think it does need to be a lot stronger. But I mean, it is terrible in this country that the Conservative parties seem to be completely beholden to the mining industry. And Tony Abbott declared his sort of undying love for the industry during the debate over the super profits tax. Previously in the past, the coalitions even voted against a totally reasonable policy to end the fact that gold mining used to be tax-free in this country, which is just insane. That was never taxed. So it is a real problem, I think. But as I say, it's a matter of people really, giving their institutions a wake-up call.
Well, thanks for joining us. It's a really interesting book, so good luck with it.
Thank you.